Howdy, everybody. Welcome to Liberty Call. I am Raymond Dahlman, and it is Friday, April 28th, 2023. Hope everybody's having a fantastical day out there. Who's ready for the weekend? This guy. It's actually starting to clear off. It snowed again last night. Not too much, but yeah, everything was covered in white this morning when I drug my lazy butt out of bed. So, plus I couldn't fall asleep till after 4 o'clock. So, hey, that's always fun. So, anyways, like I said, if it's your first time watching, I'm glad you're here. Please give me some likes, thumbs up, shares, subscribes, follows. I don't know what else there is to choose from, but click all these buttons down here. I'd greatly appreciate it. Send me a note. Tell me how I'm doing. Tell me if there's anything you'd like me to talk about next week. I'd be happy to do so. All right. Well, let's go ahead and jump into the numbers for today. The Dow Jones, another positive day, was up 0.8%, 272 points. Closed at 34,098. S&P 500 was up 0.83%, closed at 4169. NASDAQ was up 0.69, closed at 12,226. The VIX was down 7.34%. It's currently holding at 1578. Canada was up 0.55. Let's see here. Brazil was up 1.26 and Mexico was up 1.29%. Over in Europe, Germany was up 0.77, UK up 0.5%, France was up 0.1%. Netherlands was up 0.78. Spain was down 0.79%. Italy down 0.33%. Switzerland up 0.2%, and Portugal down 0.51. In Russia, the indexes there were split. MOX was down 0.42%. The RTSI was up 0.89. And overnight in Asia, starting out with the Nikkei in Japan, it was up 1.4%. Australia was up 0.23%. New Zealand was up 0.89%. In China, the Shanghai was up 1.14%. The Shenzhen Component up 1.08%. China 50 up 0.77%. DJ Shanghai up 1.11%. Hang Seng up 0.27%. And the Taiwan weighted up 1.09% for the day. So again, not, we had two decent days, I guess would be the way to put it. But let's go ahead and take a look at the weekly numbers and see how they did for the week. So starting out with the S&P 500. Looks like it's going to finish the week off up about 0.64%. I mean, you can see we had a flat day on Monday and then two down days on Tuesday, Wednesday, and then two up days on Thursday, Friday. So in the end, it was a long way just to get up a little more than 0.5%. The Dow Jones, let's see here. Dow Jones is going to finish the week off up about 0.62. NASDAQ finishes the week off up about 1.62. Dow Utilities is going to finish the week off down 1.34. And the Dow Transports going to finish the week off about 3.3% down. So that was the worst of the bunch. The Dow and the S&P up a little more than 0.5%. NASDAQ up about 1.5%, and but the other two in the red. So let's take a quick peek and see how the long-term trend is shaping up right now. So we can see here, going back to about January 3rd or 4th of 22, we've been in this long downtrend. We broke the trend in early January, but we've just been in this sideways market since then. If we zoom in a little closer, have not broken this previous high. So if it does, that could be a positive indicator. But again, looking at the longer-term trend, I would guess it's probably going to come down. If it breaks this lower trend, then that would be a signal that we would potentially be, another leg down. But again, it's a little early to tell. Plus, we're still in the middle of earnings season, and there's a lot of other things that have to happen between now and then before we can figure that out. So, all right. Let me get my screens up and ready. All right. Let's go ahead and go through this week's economic data that came out. Initial jobless claims came in at 230,000. The forecast was 248. Last week's number was 246. So we can go back and look at the last few months and see, going back to, the first of the year, we were right around 200, 190. We were in that range until really the last few weeks, really till April is where it really started to spike. It was high in November and December. We were in the 240 range, but yeah, it really bottomed out at the first of the year. So, but still, these numbers are still really, really good historically. All right. Continuing jobless claims came in at 1.85 1.8 million. Forecast was 1.878 million. So better by about 20,000. Last week's number was 1.861. So we dropped by about 5,000 there. The consumer confidence survey came in at a 101.3. Forecast was 104. Last month's number was a 104. New home sales came in at 683,000. The forecast was 630. Last month's number was a 623. Month over month gain was 9.6%. The forecast was only 1.1 for the month to month change. Last month's number was a negative 3.9. Durable goods orders month over month grew by 3.2%. The forecast was 0.7. Last month's number was a negative 1.2. So it kind of, we have a couple of months in the red, then we have a positive. It's kind of been the trend here the last few months. U.S. gross domestic product, or GDP, came in at a 1.1 number. The forecast was 2.0. Last quarter finalized in at 2.6. And we can see that Q4 started out at 2.9, went down to 2.7, and the final number last month was a 2.6. And this month, or for Q1 of this year, the preliminary numbers coming in at 1.1. We'll see in 2 months, where that is, if it's changed up or down. All right, personal income month over month came in, grew by 0.3%. Forecast was 0.2. Last month's number was a 0.3. Personal spending month over month is unchanged at 0. The forecast was a negative 0.1, and the previous month it was up 0.1. All right, last stat here. Michigan consumer sentiment came in at 63.5, right on forecast, and same as last month. All right, so that's all the data for the week that was on our agenda on Monday. All right, so let's go ahead and bring up today's market recap. S&P 500 rides energy stocks higher to stay on track for a monthly gain. All right, S&P 500 index gained on Friday, on track to end April positively as investors celebrated strong quarterly results from big oil companies. Energy stocks surged more than 1% as both Exxon and Chevron announced earnings that surpassed expectations. Meanwhile, the financial sector remained in positive territory despite First Republic Bank's shares dropping 40% following a report that regulators are seeking to place the bank into receivership to facilitate its sale to another bank. The broader regional banking sector was lifted by gains in Comerica, U.S. Bancorp, and Zions Bank, which collectively pushed the sector up nearly 2%. Materials also contributed to the market's overall gain, with Eastman Chemical leading the way with a more than 5% increase in its stock after reporting Q1 results that beat analyst estimates. Oh, my nose is itching. I don't want to sneeze. So, anyways, where was I? Analyst estimates. However, Amazon shares dropped more than 4% after the e-commerce giant reported slowing growth in cloud services despite beating expectations for its earnings and revenue. In a note, Goldman Sachs commented that Amazon had disclosed that year-over-year revenue growth rate for Q1 AWS, Amazon Web Services, had decelerated by 500 basis points in April as the company worked to meet customers' needs regarding cloud computing optimizations. Shares of the social media company Snap also plummeted 18% after reported Q1 revenue that missed Wall Street estimates expectations due to a decline in advertising income. On the other hand, Intel Corporation rose more than 4% after reporting better than expected Q1 results. With the data center business helping to boost its performance, looking ahead to the second half of the year, Deutsche Bank expressed confidence that Intel would benefit from improving demand, higher gross margins, and generate additional free cash flow. All right, so not terrible news. The world isn't falling apart today, maybe next month, but not today. So that's a positive sign. All righty, and I got one more article to cover today. It's going to be a shorter one since we had so much data to cover already. This comes from Zero Hedge. It's titled Rubino, You Can't Taper a Ponzi Scheme. And this is written by John Rubino, and it comes via Substack. All right, get my notes up. The term Ponzi scheme is commonly used, but not everyone may understand what it means and why it matters. Ponzi scheme is a fraudulent investment scheme that lures investors by paying profits to early investors using funds from more recent investors. The scheme is named after Charles Ponzi, an Italian businessman. Can't trust those wops. Who became a well-known in the United States during the 1920s for the amount of money he took in through his scheme. He initially used legitimate arbitrage of international reply coupons or postage stamps, but he later began using new investors' money to pay off earlier investors in himself. The key takeaway from a Ponzi scheme is that it collapses when new money is insufficient to pay off existing investors. This has relevance to the current financial system because if the U.S. has to pay out more for Medicare, Social Security, and its global military empire, while businesses have to roll over their debts at higher interest rates and homeowners face rising monthly payments, those gosh, hang on, let me get a little drink here. All right. Where was I? The central bank creates, I'm sorry. Where was I? Military empire, homeowners facing rising monthly payments, then new dollars that didn't exist a year ago are needed in a normal fiat currency system. The central bank creates the needed currency out of thin air. Everyone gets paid, and then the resulting decline in value of the currency is small enough that few are bothered. However, the amount of available money is shrinking, and some debts may not be paid. Creditors who are stiffed may fail to pay their debts, and this can lead to sectors blowing up. The current global financial system is like a Ponzi scheme, and the new money spigot has been turned off. During the pandemic, central banks discovered how easy it is to flood the economy with newly conjured cash. The U.S., for instance, mailed checks to citizens and gave loans to small businesses, and offered trillions in loan guarantees and direct aid to large corporations. When the Ponzi scheme unravels, governments will be faced with a choice between letting everything grind to a halt as trouble at the collapsing periphery starts heading for the core, or restarting the stimmy check machine, but on a much bigger scale and with a major twist. Instead of sending out paper or electronic checks to the individual bank accounts, the Fed will roll out its central bank digital currency, or you might hear it called CBDC, and fund free account balances for everyone who it deems worthy of such a gift. The vast majority, traumatized by the disappearance of their jobs and stock portfolios, will willingly accept free money. And just like that, the next financial system is born. However, this takes us back to gold and silver. The first phase of this process will feature an equities bear market that will take precious metals down for the ride. But in the second phase, people who prefer not to own programmable currency that's monitored 24/7 by the NSA will convert their Fed bucks to real assets. Shortages of gold and silver will ensue, and prices will respond accordingly. In summary, a Ponzi scheme is a fraudulent. Yeah, we already covered all that. So anyway, so that's basically what we have to look forward to. I mean, the Fed has two choices. They can either go back to the reckless money printing and buying up toxic assets and inflating the economy over and over and over again, like they've been doing for almost 20 plus years now, or they bite the bullet, suffer through the consequences, and, let the consequences be damned. I mean, you just gotta, whatever happens, happens. I think they're going to probably print money and at some point and lower interest rates, just because these people are all cowards and they want to save their jobs, because they know if the government collapses, they're all going to wind up in a gulag somewhere in northern Alaska. I mean, that's where I would put them. But anyways, all right. Well, if anyone needs anything from me, please go to dsafinancialgroup.com. That's where all my contact information is. If you want to prepare for the upcoming global collapse, hey, give me a call. I might be able to help you out and give you some good ideas. All right. Well, hope everyone has a fantastical weekend, and I'll talk to you guys next time. Adios.